Tech Trends 24/7 Leaders is a passionate podcast hosted by James P. Quinn on technology innovation. It provides insightful interviews with key and inspiring innovators in areas of corporate technology, office of the future, AI, real estate, sustainability, assistive technologies, and other emerging technologies. Tech Trends 24/7 Leaders will smartly position you where your business, life, and industries are moving for the future.
On today's episode, we are excited to have Mike Hochanadel on the podcast. Mike is a driving force in data center capital markets and is the managing director and head of all digital assets at Harrison Street. He brings 21 years of industry experience and is responsible for leading Harrison Street's digital business and defining strategy for their digital sector. Prior to Harrison Street, Mike was with JLL for 15 years where he focused on the data center asset class. Welcome, Mike.
Mike, great to see you. It's really good to have you back on the podcast. How are you?
I am great. I'm excited to be back. I think you've got a great little thing going, and I'm happy to be a part of it.
It's great to have you a part of it. So, Mike, we're at the early part of 2024, and it's always great to get your picture on things in terms of what you're seeing. So, in terms of trends in 2024, what are you seeing?
I think you really just have to start with demand. I think we are just in an environment where it's really hard to overstate how profound the demand is that we're seeing. It's funny. So we did this last time about 6 or 8 months ago. It felt at that point like it couldn't possibly be, any stronger demand than what we were seeing then. And if you just kind of think back to the 8 months or so since that last conversation, it's really accelerated for a variety of specific reasons. So I think the one that gets the most headlines is AI. And really, I think we're just at the very, very beginning stages of what AI could become. But just to sort of put it into some digestible terms. So if you think about the US market, let's say it's somewhere in the neighborhood of 17 to 20 gigawatts, depending on how you're thinking about it and what's captured. Pretty much anybody that you talk to is talking in terms of that amount of capacity being required by, say, 2030. That's kind of the number that you hear. And honestly, now with AI becoming more broadly adopted and a little bit of an infrastructure arms race to support the compute required for AI, you're hearing that maybe even is accelerated a bit. So maybe by 27 or 28, we need to get to that amount of capacity. So that's effectively doubling the total data center market in the next 5 years. It's hard to wrap your head around what that means, but big picture, that could be somewhere kind of order of magnitude of, say, 25 billion of capital required per year for the next 5 years. So it's just a staggering amount of demand that we're all trying to catch up to.
Yeah, and I think where are you kind of in terms of the AI, obviously every corporation is going through a digital transformation and are starting to weave in AI into their everyday vision and game plan. What specifically, maybe you can drill down on where are you seeing the biggest growth in AI from a demand standpoint?
So I think it's very hard to be too precise yet because I think the jury's still out. I think one thing that is very clear, though, is that certain elements of the AI kind of application stack are much less dependent on latency and therefore location than the traditional cloud workloads. You are now seeing, new markets and new locations open up if there's power. I mean, obviously, there needs to be abundant power, ideally efficiently priced power with access to renewable sources. But I would say the biggest change that you've seen over the last 8 to 12 months has been the concept of a demand profile that's relatively location agnostic. I think beyond that, as you start shifting into production AI workloads, I think that a good amount of the demand that comes from that category will still need to be in reasonable proximity to the end user base and will have some latency sensitivities. I also think that portion of the AI demand profile is not really mainstream yet. I mean, there are a lot of companies trying to figure out how to incorporate AI into various end user applications and user interfaces. But I would say that we're still in the very early stages of that evolution.
Mhm.
And I think when we get to many elements of the application stack supporting AI, in a full-on production mode, it could even push the demand profile beyond what we're expecting right now.
Yeah, no, it's really impactful for sure. And then, Mike, we talked a little bit before we went on air that, how, when you see that, like, how are you ramping up from that, like from the investment standpoint? Because I know you mentioned you've been in fundraising mode. Maybe take us behind the scenes there a little.
Sure. So I think there are probably three things worth touching on relative to that. I think one is where and what we're looking for as far as investments go. Clearly, just based on the sheer volume growth, all of this demand can't possibly be satisfied within the small handful of core markets that have made up the data center universe historically. You're starting to see that in terms of power constraints and land constraints, really. Certainly in Northern Virginia, markets like Chicago and Santa Clara. So I think one thing that we think a lot about is where we should pursue development or investment in ways that make sense relative to some of those constraints. And so from that perspective, kind of two things that we're doing. One is looking for sort of natural extensions of some of those core markets. So in and around Northern Virginia, you've seen groups kind of move out in different directions, trying to invest and develop in places that still tether back to the core of Ashburn in a low latency way. And so we've recently acquired a site about 60 miles south of Ashburn with Powerhouse in Fredericksburg, for example, that I would say is very emblematic of that style of investing. And then also looking for emerging markets that we think will be winners in terms of having the capacity to accommodate significant elements of growth and having the requisite pieces in place around connectivity and bandwidth that will make sense as growing markets that we think long term will become core primary markets. So our investment in New Albany is an example of that. And then the recent announcement you may have seen where we invested in Reno, I would say is an example of that. So we're constantly looking for markets like that. I would say there's probably another half dozen on our radar. And those grow out of conversations with market participants like yourself, like with some of the hyperscale customers directly, with the utility providers, et cetera. So I think that's sort of one part of the answer. I think the other part of the answer, which kind of goes back to the capital intensity, is we're finding that you really just have to be in perpetual capital raising mode to keep up with the magnitude of these projects. So if you think about a typical investment manager like us, we manage a series of funds. Generally, you're closing funds every couple of years and then deploying out of that fund. The reality is that just given the size of these projects, we're finding that we're just always in capital raising mode around our digital investment strategy. And the nice thing about that is it resonates well with our ultimate investors, because everybody recognizes that the demand profile for digital is certainly much more compelling than other real estate asset classes right now.
And then from an investment standpoint, how are you seeing this year different than in terms of rates, and kind of like, how are you seeing the landscape specifically in terms of your acquisition strategy?
Yeah, so last year was a bit of a strange year because, so far we've spent this conversation talking about demand. There have been some challenges as well, most notably on the interest rate and kind of capital availability side of the equation. I would say that as we head into this year, generally the perspective is favorable as you look out relative to the cost of capital and availability of debt financing. We haven't seen it yet, but I think most market participants are now expecting some rate relief, potentially in the near term, certainly in the medium term, and getting back to a yield curve that looks more typical. So I think that's going to help immensely to kind of get back to a place where you can underwrite positive leverage. It's been sort of a strange market over the last number of quarters, because while cap rates have remained relatively attractive for the sector, the cost of financing was leaving your underwriting in a place that was, at best neutral leverage, and if not actually negative leverage in certain circumstances. So we do see that equation unwinding a bit and starting to result in more favorable conditions moving forward.
I think that we talked about this in the past. I probably get, 2 calls a week from a private equity group looking, all of a sudden they've seen the light on data center investments and they want to get in the arena and the game. What is your perspective on that? Just because there are a lot of people, but there are few kind of similar to you that are really executing very effectively on a large scale.
Yeah, you can't really dabble in the space, just given the scale and the uniqueness of the assets. You really need to invest at scale and with conviction. It's part of what we see as being one of the barriers to entry, quite frankly. If you think about the way that you would sort of enter other sectors is by sort of dipping your toe in, doing some small deals, starting to learn the market before scale. And it's just very hard to do that in the data center space, given the sheer size of these transactions. I mean, you develop one campus and it could be $1 billion total in terms of gross cost across the multiple phases of a project, if not more. So, and if anything, the market's moving upstream as well. So yeah, no, it's very difficult, and it takes quite a bit of conviction and access to scale.
Yeah, absolutely. And then, Mike, just to segue in terms of some project you're working on, which I think, again, you've been ahead of the curve. You give us like a little overview, like on what you're doing in Reno and Ashburn, because I really think they're forward-thinking deals.
Yeah, I would say so. So both of those investments are with Powerhouse Data Center. So I would say that the program with Powerhouse is really oriented around finding campus scale projects that ultimately will cater to the hyperscale community. We spend an enormous amount of time looking for locations where we see a compelling power story, such that we're really delivering a product to the market that has a speed to market advantage relative to other options that can deliver at the scale that we're talking about. And so in that context, you really have to be thinking about at least a path to 300 megawatts or somewhere thereabouts, depending on the ramp, and ideally an ability to scale beyond that over time. So with both of those projects, we feel like we've uncovered some really compelling sites that both have access to very near-term, compelling, actionable power, and then runway to scale that over time. And that's very much the program that we have in place with Powerhouse across all of the projects that we are executing with them, which in addition to those two, we have several active development projects in Ashburn as well.
We've also talked about 1547. That seems like that's going really well too. What's the latest there?
Yep. So totally on the other end of the spectrum, but I think one of the things that's also happening in the context of all of this demand we're talking about is increased importance of interconnection. So our strategy with 1547 is really oriented around carrier hotels, connectivity oriented co-location, and ultimately helping to satisfy that interconnection requirement. That's a fundamental part of application architecture. I think the basic thesis that we have with 1547 is that as you continue to see compute get distributed into more of these emerging secondary markets, we believe interconnection will increasingly be distributed as well. So, rather than thinking in terms of always having to tether back to one primary carrier hotel in Chicago or New York City, whatever the case may be, we think increasingly you'll start to see very strategic interconnection nodes emerge in some of those secondary markets. And so we've been actively scaling our platform with 1547 as well. We have a couple of very exciting projects in the pipeline that aren't public yet, but hopefully here in early 2024, there'll be some news in that regard as well. I think one of the other trends that we haven't touched on yet that I think could become part of our investment strategy over time is the coupling of the generation side in terms of power with the data center side. If you think about just the order of magnitude scale that we were talking about earlier in terms of the growth of compute capacity, the pressure that will place on the grid in terms of both transmission and generation is going to be enormous. And so we really think over time that you're going to start to see on-site generation, load balancing, microgrids increasingly be a feature of these campus scale projects. So at Harrison Street, we do have an investment strategy around investing in utility projects. And I think over time, again, you'll start to see that, dovetail with some of the things that we're doing on the data center side directly.
That sounds exciting. It seems that just like the things that we're saying. And then when we were talking about 1547, Mike, I would imagine you're still very bullish on the co-location market just for a specific area to discuss, just because what we're seeing is that really running out of space of all the providers' portfolios. We're starting to see AI as a big part of new colo projects going forward. So what are your thoughts on that? You seeing a similar thing?
100%. I would say that there are certain workloads that we've seen sort of repatriate from the cloud back into colo for a variety of reasons, cost and design flexibility. I would say that we've seen co-location rates tick up as vacancy has dropped, which has just made the economics of that business much more compelling. And I think we still are very focused on making sure that we're operating and investing in what we see as being very strategic locations, typically oriented around connectivity. But absolutely, we share that view that we're very bullish on the co-location market as well.
And then geographically, Mike, in terms of obviously been very active in the States, what's on the horizon for EMEA and APAC, or how are you kind of looking at that?
Yeah, so Europe is very much a priority for us at the moment. I would say that all of the demand characteristics that I described and the demand signals that we're getting apply to Europe as well. It's a bit of a smaller market right now, maybe somewhere in the neighborhood of, I don't know, a third to a half the size of the US market. It's a bit more fragmented. I think we believe that the end users probably need a little bit more help there from third-party operators than they do here, which is a helpful dynamic. And so entering Europe with scale is something that's a high priority for us as a firm. We do have a very active presence in Europe already. We're investing out of our Europe Fund 4 and also raising a Europe Core Fund. So we have capital already, but so far have not yet made a data center investment in Europe. So I would say that for us, that's a huge area of focus as we head into 2024. And I would expect some point mid-year, maybe third quarter, you'll start to see some announcements about our activities in Europe. I would say Asia Pacific is definitely on our radar longer term. We did actually recently open an office in Asia, but so far I'd say a bit more focused on the capital rising side of the equation rather than the investment side of the equation. But the reality is in this sector, as you well know, it's a global market. And so to the extent that you can offer holistic kind of global multi-market solutions for your customer base, it ends up being a much more productive conversation with that group. So I would say that's kind of where we sit today in terms of our thinking around expansion beyond North America.
Makes sense. And we touched upon interest rates, Mike. What do you think in terms of what's your outlook there?
I would say we expect the rate environment to moderate at some point in time. We expect that the Fed will sort of soften their monetary policy. The question is just when. Is it third quarter? Is it fourth quarter? Is it sooner? I think most people thought it would be a little bit sooner, but then the most recent economic data did not quite support that yet. So I don't know that we have any insights that are particularly different or unique relative to others out there, but it certainly feels like most people in the market expect things to normalize from a rate perspective at some point this year.
And then from an industry standpoint, it's amazing in terms of the growth of it. How are you doing in terms of build out your team and really add resources, just because it's such a great time really to be active? And I'm sure you've been spending some time on always enhancing your intellectual capital around you, right?
Yeah, I would say just trying to be smart and incremental in terms of adding value add resources that allow us to maintain kind of the integrity of what we're doing collectively, and just trying to balance to make sure that we've got the appropriate resources in place, but we're continuing to add talent that is accretive to what we're doing, and also kind of a fit culturally as well. I think it is sometimes difficult to scale and grow and just sort of maintain the character of an organization that makes it unique and valuable. So I think we're trying to be very thoughtful about it. I would say in general, we access quite a bit of operating leverage just from a talent standpoint in terms of how we work with our partners. So we've spent some time talking about 1547 and Powerhouse, two of our most important partners in the space. And obviously through them, we're accessing a deep bench of their talent as well. In addition to those two partners, we also invest with a group called Opidin, which is an exceptional multi-sector national developer with strong data center capabilities. We're invested in a fiber platform, Summit Infrastructure Group, unbelievable team with talented individuals there. And then also we have a relationship with Lincoln Property Company and their data center division being Lincoln Rec House. So through the relationships that we've created in support of our program, we've managed to create significant operating leverage in that regard.
Yeah, and I think you mentioned Summit. I'm interested in the fiber connectivity, like what you're thinking there, just because, like you said, with your earlier comments in terms of connectivity, really looking at where that fabric is and where it's going. Is that kind of what was behind that? Because I think that's a good strategic move.
100%. I think, big picture, all of the data center demand that exists at this point in the evolution of the market is heavily interconnected with other data centers, both internally and externally. And at scale, dark fiber is the preferred networking solution for the bulk of the major users that make up the marketplace. So for us, we find it interesting from a variety of perspectives, but the economics of that type of business at scale are interesting. And I think there are significant barriers to entry as well. And ultimately, as each new data center gets deployed in a market, it just gives rise to this positive feedback loop where additional connectivity is required between that facility and all the other existing facilities in a market. And then it almost creates this sort of exponential growth opportunity, just sort of interconnecting various sites within a market. So yeah, a business that we would love to find other opportunities where we see strategic overlap between kind of a network build out or a network solution and new markets that we're entering. But there are not as many opportunities like that as you might think is the reality. There certainly aren't as many opportunities like Summit. North Virginia is a very unique data center market, as you know, and obviously it's kind of in Summit's backyard there. So,
well, Mike, it's always a pleasure to have you back on. It's great. I think that we should definitely get you on in a couple months because I want to hear about some of those exciting investments and really appreciate your time. And this was very insightful. So thank you.
Yeah, I'd love to do it. And I agree. I think, doing it every few months is probably the right cadence because there's so much going on and it is such a dynamic environment right now that, yeah, it's kind of good to check back in and see where we were right, see where we were wrong, and hopefully the demand's still there and we all keep executing.
Absolutely. Mike, great seeing you as always. We'll be in touch and thanks again. Thank you.
Right. Thanks a lot, Jim.
We hope you enjoyed this episode of Tech Trends 24/7 Leaders. To learn more about technology trends, you can follow me on LinkedIn. You can also read my book, Tech Trends 24/7 and the Impact of COVID-19, which is rated a must-read book by CIO Insight. The book is available for purchase on Amazon or on our website, Tech Trends 24/7. When conducting research for the book, I was inspired to see how technology innovation was making a positive difference in people's lives. As a result, in 2020, I founded Beacon of Hope 365, Our mission is to leverage technology to help people in need. More information on the charity can be found on beaconofhope365.org. Thanks again for tuning into the episode, and a big thank you to my entire podcast team, Lindsay Sowert, Brianne Lunghammer, and Sal Forcina. See you on the next episode.